Welcome to the tutorial on advanced accounting. In this tutorial, we are going to show the second part of goodwill valuation. There was another tutorial on goodwill valuation, and this is the second part. The valuation methods of non-purchased goodwill are average profit method, super profit method, capitalization of average profit method, capitalization of super profit method, annuity method. Among these methods, in the last tutorial, we have already learned about the average profit method. In this tutorial, we are going to learn the rest of the method, I mean super profit method, capitalization of average profit method, capitalization of super profit method, and annuity method. Super profit method. Super profit is the excess of actual profit over the normal profit of an enterprise. Here the actual profit means the average maintainable profit, and we need to multiply the rate of return with the capital employed to get the normal profit. And if we deduct the normal profit from the average maintainable profit, we will get the super profit. In super profit method, we have to follow the steps shown below. Step 1, we need to calculate the capital employed. Then we need to calculate the normal return or normal profit. Normal profit can be calculated by multiplying the rate of return with the capital employed. After that, we should calculate the average maintainable profit. Here average maintainable profit means we need to adjust the profit by adding or deducting the abnormal or extraordinary items. After that, we need to calculate the super profit. Super profit means deduct the normal profit from the average maintainable profit. And the last step, we need to multiply the super profit by the number of years purchase. This number of years purchase would be mentioned in the question. However, after the multiplication, the product or the result would be considered as a value of goodwill. Here we can see an illustration for the super profit method. The following particulars are available in respect of a business carried out by Sajjad. The amount of capital employed is 50,000. Trading profit after tax in 2012, 12,200, 2013, 15,000, 2014 there is a loss, 2,000, 2015, 21,000. So these are the 4 years profit. And market rate of interest on investment 8% and rate of risk return on capital invested in business 2%. That means ultimately there will be 8 plus 2, 10% return. Remuneration from alternative employment of the proprietor if not engaged in business is 3,600. If the proprietor is not engaged in this business, he or she will get 3,600 per annum. That means there is an adjustment for the profit. You are required to compute the value of goodwill on the basis of 3 years purchase of super profit of the business calculated on the average profit of the last 4 years. Let's calculate the average profits first. We can see from the question 4 years profit 12,200, 15,000, 2,000 loss, 21,000. If we add these 3 items 2012, 12,200, then 15,000, then 21,000, and if we deduct the loss 2,000, the total profit would be 46,200. And to get the average, we need to divide by the 4 because these are the profits of 4 years. The average profit is 11,550. Now our task is to get the average maintainable profit. To get the average maintainable profit, we need to adjust the profit. From the question we can see we need to adjust the remuneration. That means our average profit is 11,550. From this 11,000 we need to deduct the remuneration because it should be charged as a remuneration for the owner. We need to deduct this 3,600, and after that we will get the average maintainable profit, which is 7,950. This is our one part, average maintainable profit. Now we need to calculate the normal profit or normal return on the basis of capital employed. Our amount of capital employed is 15,000 and we will get 8 plus 2, that means 10% returns. Capital employed multiplied by rate of return, we can see 8 plus 2, 10%. 10% of 50,000 is 5,000. This is the normal profit. And here our average maintainable profit is 7,950 and this is the normal profit. And now we will calculate the super profit. To calculate the super profit, we need to deduct the normal profit from the average maintainable profit. That means this is the average maintainable profit is the actual profit and this is the expected profit on the basis of rate of return. On the basis of rate of return, the normal profit should be 5,000, but actually we got the profit up to 7,950. That means there is a super profit. Here the super profit is 2,950. And according to the question, we can see we will get the value of goodwill on the basis of 3 years purchase of super profit. That means we need to multiply the super profit with the 3. Here the amount of super profit is 2,950 and this is the 3 years purchase of profit. Amount of goodwill is 8,850. This is the goodwill on the basis of super profit. There is another illustration we can see. From the following information, calculate the value of goodwill taking 5 years purchase of super profit. Here the information is not directly showing the capital employed, but there are some information from which we need to calculate the capital employed. Here we can see equity share, 5,000 equity share at the rate of 20 per share. Preference share, 1,000 preference share at the rate of 100. 8% should be considered while paying the dividend, but for calculating the preference share total amount, we just multiply the 1,000 shares with the per share 100 and general reserve 30,000. And there are other information. Loss on revaluation of plant and machinery 12,000. Average trading profit after tax 30,000. This amount will be considered as a average maintainable profit, and normal rate of return on capital employed is 10%. From this information, we will calculate the super profit, then we will find out the valuation of goodwill. Here is the solution. First of all, we need to find out the capital employed. Here we can see equity share, 5,000 equity share and per share price 20. Total amount of equity is 1 lakh. And preference share, 1,000 preference share, per share 100. Then the total amount is 1 lakh. General reserve 30,000. This general reserve arises from the retained earnings or profit and loss account. The total capital employed or equity is 2,30,000. Since there is a loss of revaluation, we are adjusting it with the total amount. If we deduct the 12,000 from the 2,30,000, we will get the total capital employed. Here the amount of total capital employed is 2,18,000. We got the capital employed. From this capital employed, we need to now calculate the normal return or normal profit. We can get the normal return or normal profit by multiplying the normal rate of return with the capital employed. Here the amount of capital employed is 2,18,000. So if we multiply these two, we will get the normal return. And from the question, we can see the average trading profit is 30,000. So average maintainable profit 30,000. Now we can calculate the super profit. To calculate the super profit, we need to deduct the normal return from the average maintainable profit. This amount would be considered as a average maintainable profit, and this amount is the normal return or normal profit on the capital employed. This is the amount. If we deduct this 21,800 from 30,000, we will get the super profit. And finally, we will get the goodwill. From the question, we can see goodwill should be calculated on the basis of 5 years purchase of super profit. Here the super profit is 8,200, and if we multiply this 8,200 with 5 years, then we will get this two item, and after multiplying, the product or result is 41,000, and this is the goodwill of that company. The another method to calculate the value of goodwill is capitalization of average profit method. We already know that in the first tutorial we have learned how to calculate the average profit, and from this average profit we can capitalize it to get the value. Here we can see if we divide the average maintainable profit by the normal rate of return, we will get the value of the firm, and this process is called capitalization of average profit. If we deduct the capital employed from the total value of the firm, then we will get the goodwill. Here we can see there is an illustration on capitalization of average profit. The information are, from the information given below, calculate goodwill as per the capitalization of average profit method. The amount of capital employed is 14 lakh, normal rate of return 10%, net profit before tax 40%, and these are the profits of 5 years. First year 2,20,000, second year 2,80,000, third year 2,60,000, fourth year 3 lakh, and fifth year 2,75,000. So there are profits of 5 years, and we can see non-trading income of 10,000 and debentures interest 20,000 on an average is included in the profit and loss account. That means these two items need to be adjusted to get the average maintainable profit. The solution is, we need to calculate the average profit first. Here the 5 years profit and divide by 5. This is the average profit. From this average profit, we need to calculate the average maintainable profit, and we can get the average maintainable profit by adjusting some items. So the first item is average profit before tax 2,67,000 from this amount, and from this amount we need to add the debenture interest, because this debenture interest should be adjusted to get the actual profit. So if we add the 20,000 with the average profit, we will get the 2,87,000. From this profit, we need to deduct the non-trading income. This is not a trading income, non-trading income. That's why we need to deduct it to get the average maintainable profit. The amount of non-trading profit is 10,000. After deducting, we will get the profit before tax. The amount of profit before tax 2,77,000. And if we deduct the tax at the rate of 40%, the amount of total tax is 1,10,800. After deducting the tax, we will get the profit after tax. This amount 1,66,200 is the average maintainable profit. Already we know that to get the value of the firm, we will apply this formula. This is the capitalization of average profit method. We can see the average maintainable profit should be shown in the upper level, then we will divide by the normal rate of return. We already know that our average maintainable profit is 1,66,200. This is the amount. Then we need to divide by the 10, then multiply by 100. So this is the value of the firm after capitalizing the average maintainable profit after tax. And to get the goodwill, we need to deduct the capital employed from the total value of the firm. Here the total value of the firm is 16,62,000, and capital employed, from the question we can see capital employed. If we deduct the capital employed from the total value of the firm, we will get the goodwill. Here the goodwill amount is 2,62,000. To capitalize the average maintainable profit, we need to divide by the normal rate of return, and we will get the value of the firm. From that value of the firm, we need to deduct the capital employed to get the goodwill. This is capitalizing average profit method. Now we can see another method, capitalization of super profit method. We need to calculate the super profit first, then we will capitalize this super profit by dividing the normal rate of return. And we already know that to get the super profit, we need to deduct the normal profit from the average maintainable profit. We can get the goodwill by dividing the super profit by normal rate of return. Let's see a practical illustration. There is an illustration for the capitalization of super profit method. The following are the particulars about Gupta and Company, a partnership firm. Here the average capital employed is 7 lakh. Net trading profit of the firm for the past 3 years, 3 years profit here, and market rate of interest on the investment 8% and rate of risk return on capital invested in business 2%. Ultimately the rate of return or normal return is 10%, 8% plus 2%. Fair remuneration to the partners for their services 12,000 per annum. The profit included non-recurring profits, that means non-trading profits 1,000, out of which it was considered that even non-recurring profits had a tendency to be recurring at an average rate of 600. We need to calculate the goodwill of the firm by the following methods. Super profit, already we know the super profit. Since we are going to show the illustration on capitalization of super profit, the super profit should be calculated first. That's why this amount should be calculated. After that, we will show the capitalization method with the super profit. So here, this is the solution, calculation of super profit. First of all, we need to get the average profit. Here we can see 3 years profit. By dividing 3, we will get the average profit. And we can see there is a remuneration to the partners. We need to deduct it. Partners remuneration 12,000. We need to deduct it. And ultimately here we can see 91,600. Then we will deduct the non-recurring income. This 400 is the non-recurring income. So if we deduct the non-recurring income, we will get the average maintainable profit. And we already know that from average maintainable profit, if we deduct the normal profit or normal return, we will get the super profit. To get the normal profit, we need to multiply the capital employed by the normal return. We can see the capital employed 7 lakh and normal return would be 8% plus 2%, 10%. Normal return from the capital employed is 70,000, and this is the average maintainable profit. If we deduct the normal profit from the average maintainable profit, we will get the super profit. Here the super profit is 21,200. According to the requirement, we need to calculate the goodwill under the super profit. Just we need to multiply the super profit to get the value of the goodwill on the basis of super profit method. Although this is not our objective. Our objective is the valuation of goodwill under the capitalization of super profit method. We need to divide the super profit by the normal rate of return to get the value of the goodwill under capitalization of super profit method. Here the super profit is 21,200. Normal rate of return is 10. If we divide and if we multiply the result with the 100, then we will get the value of goodwill under the capitalization of super profit method. So this is the value of goodwill under capitalization of super profit method. So our last method is annuity method. What is annuity? Annuity is a series of equal periodic payments occurring at an equal interval of time. Under this annuity method, goodwill is calculated by taking the average super profit as an annuity. That means the average super profit should be considered as an annuity, and that annuity should be discounted with a interest rate for a number of years. However, the present value of the annuity would be considered as the goodwill. Again I am repeating, the present value of the annuity discounted at the given rate of interest, I mean the normal rate of return, is the value of goodwill. Here we can see the formula, present value of an annuity formula. Here the A indicating the annuity, which is the super profit. Then we need to multiply this. Here we can see first bracket 1 minus first bracket 1 plus I means the interest rate, first bracket to the power minus n. Here n means number of years, and we need to divide this upper level by the I means the interest rate. So by doing this formula, we will get the present value, and the present value of the annuity would be considered as the value of the goodwill. Let's see a practical illustration. Here we can see there is an illustration. The net profit of a company after providing for taxation for the past 5 years are 40,000. 50,000, 30,000, 70,000, 80,000. These are the 5-year profits. The net tangible assets in the business is 4 lakh, on which the normal rate of return is expected to be 10%. So our normal return would be 10%. It is also expected that the company will be able to maintain its super profit for the next 5 years. That means 5 years super profit. So this 5 years should be considered as the number of years, and the super profit should be considered as the annuity. Calculate the value of goodwill of the business on the basis of an annuity of super profits, taking the present value of an annuity of 1 taka for 5 years at a 10% interest. This information should be used for a present value interest factor for annuity. However, we will show it. Let's see the solution. Here, average profit, we can see 5 years profit divided by 5. This is the average profit. And to get the super profit, we need to deduct the normal profit. And to get the normal profit, we need to multiply the capital employed with the rate of return. We can see the rate of return is 10% and the capital employed is 4 lakh. The amount of normal profit or normal return is 40,000 and the average profit is 54,000. If we deduct the normal return or normal profit from the average profit, we will get the super profit. So in this annuity method, this super profit would be considered as a annuity. We can see the formula: annuity multiplied by 1 minus first bracket 1 plus I means interest rate, to the power minus n is the number of years, and the whole item should be divided by I, that means the interest. Again I am repeating, in this method super profit should be considered as the annuity. The amount of annuity is 40,000, and we can see 1 minus 1 plus 0.10 means the interest rate. Here you can see the interest rate or normal rate of return. It should be considered as a discounting rate, and to the power minus 5. Although this is not visible in the clear way, but this should be considered as a to the power minus 5. Okay, and divided by I means the interest rate, that means 0.10. If we use the calculator, we can get the present value interest factor for the annuity. This amount can be calculated by using a calculator, or this amount can be taken from a present value interest factor for annuity table. This is the present value interest factor for annuity is 3.7907. You can take 4 digit after decimal, but for an accurate result we have taken 10 digit. However, if we multiply this present value interest factor for annuity with the annuity 14,000, we will get the present value, and this present value would be considered as the value of goodwill. So here the goodwill is 53,071. Now we are going to show how to calculate this present value interest factor for annuity in the calculator. If you want to get the present value annuity factor for annuity, here you can see 3.7907867,694. This amount we can use the calculator as this way: first bracket 1 minus first bracket 1 plus 0.1 plus to the power minus 5. This bracket will automatically come, and bracket divided by 0.1. By this way we can get the present value interest factor PVIF for annuity. And if we calculate the whole amount in a single typing, then we can write the 14,000 in the first place, then multiply by this formula. Here we can see first bracket 1 minus 1 plus 0.1 to the power minus 5, first bracket divided by 0.1. So this is the ultimate total result. And we can also get this 3.7907 from the annuity table. This is the annuity table for the present value interest factor for annuity. We can see our interest rate is 10%. Here the 10%, and number of years is 5. So if we go there, 10% and 5 years, this is the number of years and this is the percentage. We can see the present value interest factor for annuity is 3.791. However, I am going to show you how to calculate this one in calculator. This is the calculator. From this calculator, we will calculate the 3.7907867694. First, we need to give the first bracket, this first bracket, then 1 minus, again first bracket, 1 plus 0.10 plus 0.10, first bracket, then the sign of to the power. We can see we can use this as a to the power sign. We can see this is the to the power sign. Then we will write the minus 5 as a to the power. Then 5 minus 5. This is the minus 5. After that, we will give the bracket. We can see to the power minus 5. And we will divide this whole item by 0.10. That's why we press divide 0.1. So this is the 3.79078667. So this is the present value interest factor for the annuity of 10% 5 years. But if we do the whole thing 14,000, we can also do it. Let's see it. First, we need to type the 14,000 multiply first bracket 1 minus first bracket 1 plus 0.10 first bracket to the power minus 5. This is the minus 5. We have written in this way 5 plus minus. This means the minus 5. Then for dividing by the 0.10, we will provide another bracket. Then divide by 0.1. So this is the ultimate result, 53,071. Using the calculator, we can get this amount easily. This way, we can get the present value, and using this present value for the super profit, we will get the goodwill. Here the goodwill is 53,071. Thank you.